Visa just announced earnings. Guys, this is an important one. Why? Everyone's worried about recession. 70% of GDP is consumer spending. Visa is the largest credit card company in the world. This will be a good driver to see how do people, because right now consumer sentiment is low. Like the lowest I think it's ever been. Consumer sentiment means how likely are people to spend money in the future. So we're going to look at Visa to see what they're saying. You might want to look at their earnings call, listen to it at some point, or read the transcript because that'll be a big driver. But this is their press release right off their website announcing results. If you're new to this channel, I'm Paul. I'm a value investor. The day-to-day, quarter-to-quarter results don't affect me much. I don't really like to look at analyst expectations. I do it because I want you to understand why I believe that. I look to make sure the company is a good company that I'm paying a reasonable price for, and I can reasonably determine what they're going to make in the next 5, 10, or 20 years. So with Visa, GAAP net income of $3.4 billion or $1.60 per share, and non-GAAP net income of $4.2 or $1.98. They were expected to get $1.75 per share. I don't know if it was GAAP or non-GAAP. Revenues, $7.3 billion, an increase of 19%. That is big. Now remember, don't look at that and think, oh, we're out of the woodwork. No, that was coming off of still a tough year last year, but 19% revenue growth is really, really solid. Now, let's go right here. Payments volume, up 12%. Cross-border volume, excluding intra-Europe, up 48%. Cross-border volume total, 40%. Processed transactions, 16% increase. That's great. I think the key for this will be, where does Visa see things going? Obviously, it's July 26th. They've had 26 days of the new quarter. I'm sure there's some sort of idea of what they think is happening in the future and going on right now for the new quarter, and they'll guide that in their earnings call and their transcript. So let's go to our software. If you're a member of our software, please go to the stat. Please follow along here. Our goal here is now look at the fundamentals of the business and then use those fundamentals to make assumptions about the future, and that'll tell us what we should pay for the stock using our stock analyzer tool. So first off, I'm going to Visa. Couple things first. The stock is basically flat after hours. Flat after hours. Okay, obviously people aren't terribly excited. In the last year, the stock hit a high of 252, a low of 187, and it's currently at 213. Okay, so it's right in the middle of everything. Now, let's go look at some data here. $350 billion market cap. They pay $3 billion a year in dividends, which is only 0.7%. But they can easily afford those dividends. Remember, dividends aren't always safe. You have to compare it to their free cash flow. And on our software on the main page, we put last 12 months free cash flow and the last 5 years of free cash flow. They can easily afford it. It's about 25% of the last 5 years free cash flow average. High return on invested capital. Look at this gross margin, 80.5%. That means for every dollar that comes in, 80 cents goes to the bottom line. But look at this. Their bottom line profit margin, including taxes being paid, 51%. This is a high margin business. This thing probably ain't going out of business anytime soon. So let's go to our income statement to see how revenue has grown. Look at this revenue growth in the last 10 years. 11.87 to 34 billion. Look at this jump last year. 27 to $35 billion in revenue. Let's look at this net income number. 2.4 billion to 13. That's what happens when you have a high gross margin. You can really drive a lot to the bottom line. Let's go look at their free cash flow on our cash flow statement. Now remember guys, if you're new to the channel, this is not put on cash flow statements. I added here for you to make the math easy. 10 years ago, they did $1 billion in free cash flow. Last year, 15.28. And I'm actually surprised it was only 11.4 5 years ago. That's okay. All right, so let's go to our 8 pillars tab to get a feel for the company from 8 pillars perspective. All right, so high 5-year PE, high 5-year price to free cash flow. But guess what? Everything else is a check. Look at this. Now, I will say, I don't necessarily like it when companies buying out back 29% of its shares when it's an expensive stock. We want companies buying back cheap shares. That's how you use the capital well. But in the last few years, with so much cash flowing, people have started to buy back their shares as a way of giving their investors a higher piece of the pie, a bigger piece of the pie. I'd rather instead of them buying back shares, give it to me as a dividend. I'd rather have them, instead of them buying back expensive shares, give it to me as a dividend, even though dividends are not tax efficient. Buying back shares is a very popular thing to do, but I want to focus on that when they're cheap companies. A company like, I know it sounds Best Buy. Buy back the shares. They're selling cheap and people don't feel very good about the future because it's retail. Buy back the shares, give me a bigger and bigger piece of the company. But back to Visa here. Now let's go to the stock analyzer tool. Guys, if you watched our videos before, you're going to hear me say this 1,000 times. I've even had people in our community write me memes and say, as Uncle Paul says, every investment's the present value of all future cash flow. If you remember that, and if you really adhere to that, you will realize that your life will become a lot easier. The more you learn, the less you fear. That's the big goal with investing. We want you to learn a ton. That way you fear less. We want you to realize that every investment, every stock is a weighing machine in the long run and a voting machine in the short run. That means in the short run, it's a popularity contest. In the long run, it's based on fundamentals and what's behind the company. What are the financials like? So I'm going to do a 10-year analysis. You can do 1 to 20. So look at the revenue growth. 10% a year over the last 10 years, 26% in the last year, 8.6 for the last 5 years. Now, my goal is to be conservative. I want to be conservative. That way I can buy the company at a cheaper price. I know that sounds not fun, but your goal is to invest at great values. Be patient. So with the ongoing potential recession, I'm going to go 3, 6, and 9% revenue growth. Profit margin, 45% over the last 10 years, 51% over the last 5. I'm going to do 45, 48, and 51. Free cash flow margin, 48, 51, 54. PE. Guys, I know it's Visa, and the current PE and price of free cash flow is low mid-20s. I'm going to go 14, 16, 18. The reason they have high PEs and high price of free cash flow is because they have a large moat and they have major growth rate. I definitely think Visa has a good moat. The growth rate could be good. That's why I'm putting 18 for the 9% growth rate, because I think it's very aggressive. And finally, my desired return, 12.5%, because I can get 9 or 10% from buying a low-cost ETF. So give myself margin of safety and a reason to buy the company. So I'm at the analyze button. I want you guys to remember, the numbers are going to be 6 numbers there, based 3 on earnings and 3 on free cash flow based on low, middle, and high. If the numbers are green, it doesn't mean go out and buy. It means great. Now make sure your numbers above are reasonable. Do a little bit of research. Join our community. Do that research. It's less than a cup of coffee per day, and it'll totally change your life. But do the research. If it's red, it doesn't mean discard the company. If it's really high, if it's really far away from the red number, then yes, just wait for it. Wait to be patient. Add it to your watch list. Wait to come down in price. So we hit the analyze button. Boom. All right, it's all red. But how far are we? Low side, 75, high side, 140, middle side, 100. So it's pretty far off. My opinion is add it to your watch list around 125. Get ready to start doing more research on it once it falls further. Thank you very much for your time, guys. Don't forget to subscribe to our channel.